Okay, welcome back. I think people slowly coming back from coffees. Everybody ready for action again? Yes? If you could come in and sit down, please. Okay, so welcome back to the reverse pitch sessions where we have impact investment funds pitching their own funds to limited partners and to a bigger audience. We're going to have another 8 funds in this section before lunch. And we're going to kick off with a UK fund, born actually from the marriage of 2 pioneering UK funds tackling inequality. So welcome to the stage, Growth Impact Fund. Come. Woo!
Hi, everyone. My name is Matu J. Loganathan, and I'm the head of investments at the Growth Impact Fund. In the UK, over 14 million people live in extreme poverty. This has been exacerbated by COVID and the cost of living crisis. And today, the ones that are the most affected are people that are underrepresented and diverse. At the Growth Impact Fund, we believe that the diverse entrepreneurs are the ones best placed to solve the problems we've defined here today. Unfortunately, these are also the founders that do not have access to capital. Between 2009 and 2019, only 2% of venture capital early stage funding went to Black entrepreneurs. We're creating a £25 million evergreen fund that is going to be investing in 50 social entrepreneurs in the UK. The fund is a consortium backed by Big Issue Invest and Unlimited, 2 leading social impact investors within the UK. And we have this track record and the pipeline to deliver this fund. So how are we going to be doing this? We're investing across 4 key sectors: consumer business, education and learning, health and social care, and employment and training. We're looking for founders that have overcome barriers in socioeconomic advantage, race, gender discrimination, place-based discrimination, and disability. We're hoping to make investments in equity, patient debt, as well as revenue participation. And we truly believe that these are the organizations at the pre-seed level that are going to be able to get to scale. We've got about $6 million in grant funding that's going to act as $3 million of it as a first loss layer for investors coming into the fund, and an additional $3 million as technical assistance grant funding to support our ventures, hoping to deliver a return of 7.5% back to investors. How are we going to create the impact? Who are we? So the Big Issue Invest is one of the UK's leading impact investors. We have over 150 million in assets under management and 41 million in direct investments going to social enterprises within the UK. Unlimited is the foundation for social entrepreneurs in the UK. We've backed over 17,000 social entrepreneurs. And we have leading sector partnerships with the likes of eBay and Comic Relief. And finally, we have an independent evaluation and continuous learning partner in Shift that we're working with to make sure that we stay on track to our impact. How are we going to create impact? We're focusing on SDG number 10, which is reducing inequalities. We think that we're going to be able to support and maintain 85,000 jobs and over 105,000 training and employment opportunities. We also think that we're going to be contributing to good health and well-being and zero poverty SDG goals, creating over 240 million in social value. And finally, in 5 years, I don't want to be running a diversity, equity, and inclusion fund. One of our major objectives in the fund is to share the systems and the processes that we're developing to make investment funds more inclusive for all of the entrepreneurs we're hoping to support. We have 10 million committed so far with cornerstone money from the Access Foundation for Social Investment and the Bank of America. And we really hope that you'd be able to join us on this journey.
Great, awesome, thank you. And love the ecosystemic focus there. Any questions from the front row? Go for it.
Just was interested to hear you about the social value. I think it's pretty key to better understand them. So if you can just explain for the audience, I think it would be good.
So what we've done is we've taken proxy values from our current portfolio of the social value that's been generated, and we've determined those values by running mini randomized control trials to determine what the difference is going to be in the value created by our social enterprises versus a normal business versus the NHS or a government provider. And we've taken that and applied it to our number of entrepreneurs that we think are going to be working across the 4 key sectors. Critically, healthcare and access to goods and services that are for the poor within the UK is the factors that we're looking at there.
Great. Thank you so much. Thank you. Next up, we have a very small cap Dutch investor uncompromising about gender diversity in the teams they invest in. This is Karmijn Kapitaal. Welcome.
My name is Cilian Verplanken. I'm representing Karmijn Kapitaal, of which I'm the co-founder. I'm asking you a question. How many times, as an investor, did you ever meet at the other side of a table a gender diverse management team? Or let alone female entrepreneurs? Now, that was the question we raised ourselves in 2009, being 3 female fund managers or investment managers. And we said there was less than 5 over 20 years of work. And then we said this needs to change. So we started funding Karmijn Kapitaal, being the first fund of its kind. We focus totally at the S of ESG, at the social part, and that has to do with the fact that the E and the G follow and are aligned out of that S. It is in our roots. Now we also have those SDG tiles, and that's what we are aligned with is number 5, which is then the gender equality one. We are currently raising our 3rd fund, and that will be a hard cap of 120 million, and have now soft circled 70 million, but we still have till the end of the year. We are addressing an undertapped market or underserved market. In the Netherlands, 25% of all SMEs are combined are gender diverse teams. But if you ask all the private equity players, less than 1% of their portfolio contains mainly also women in their teams, because they usually bring on the diversity. We invest in small cap buyouts, we provide growth equity capital, and we call ourselves collaborative capital in the sense that we would like to work with the founders. We're usually the first investor in a team, and we take minorities, majorities, as the case may be. But next to that, we also drive industry change. In the Netherlands, only 3% of all partners in private equity are female. 97% is men. Well, no problem with men at all, but within Karmijn it's just the other way around. We have 2/3 of female partners. I would like to show you we developed this framework ourselves. We want to embrace the power of diversity and inclusion. And this framework unlocks the value within these SME companies. On the left side, you see different leadership styles, feminine and masculine. You can decide for yourself what you think applies to you, but it goes for long-term relationship, short-term gains. It goes about inspirational leadership versus taking control and action. It goes about task-oriented and long-term views. This together in a management team brings in a company to inclusive cultures, where, let's say, differences are a contributor to success. It leads to risk management. When you have balanced opinions, then you see that risks are identified earlier on, and you can manage them earlier. It goes to creativity and innovation. It's been said so many times already this morning. But making mistakes is okay, because out of mistakes, you get new ideas and new products. And all in all, sustainable entrepreneurship, taking care of your environment, taking care of all stakeholders, not only shareholders. That in a company leads to employee satisfaction, and if you have happy employees, customer notice, and they will order more. So all in all, this creates a double bottom result, as we say. Happier, healthier customers reflecting society, but also having better financial returns. Twice. And I would like to show you our outcome. When we invest in companies, they are usually diverse already, but when we invest in, let's say, sex-only ones, then we apply the other sex to it. Today, nearly all our companies are diverse. It's just a woman retired a year ago. With regard to female CEOs, in our companies, we're nearly at parity. I want to stress, this has nothing to do with activism. It's just we don't want to comply with the excuses of there are no good females who can fill in this role, or we need the best, which we always hear. Why can't a woman be the best? Now, thank you for your attention. This is what we try to achieve. Thank you.
Thank you.
Thank you very much for your presentation. My question is, how do you track progress on your impact objectives? So you mentioned how this diversity that can lead to value creation, but is there a way in which you track how that value creation happens?
Yes, we set the KPIs with all the portfolio companies, and we monitor this closely, and we report on it. We also have the help of MG Hudson Spring in that, with each and every company. And how we track it, it is at different levels. It is about salary gaps. It's about employee satisfaction. It's about churn within employees. If you have just companies where everybody runs away, you know it is not sustainable. All these different measures are being measured. And that's what we take on in our reports as well. Let alone, of course, counting men and women. Which is obvious.
Awesome. Thank you so much. Thank you. Okay, and next we have a fund which invests to help those first hit by the transition, pioneers in France and in Europe. It's BNP Paribas Social Business Impact. Welcome.
Thank you. Hello everyone, my name is Marie d'Auvergne. I'm a senior analyst within BNP Paribas. What we do within my team is we are developing and managing solidarity funds in order to finance and support the growth of non-listed social businesses and non-profit organizations. And I'm very happy to be here today to present you BNP Paribas Social Business Impact Fund, which as of today has invested in 125 million euros in 23 investees. So our fund's objective is to invest in social and environmental impacts. We target social businesses of what we call in France l'économie sociale et solidaire, which is mainly solidarity and social economy. And our main criteria is the type of beneficiaries of the product or the service. These beneficiaries has to be excluded or disadvantaged people. And this exclusion can come from health, education, isolation, old age, etc. And thanks to the asset that we have under management today, we are able to have a diversified impact. As you can see here, we have invested in 23 investees in 7 social areas. For us, access to employment, housing and health are what we consider to be our main targets, since these are the first and more painful exclusion that you can have. But we also invest in other areas, such as environment, microfinance, accommodation for dependent people. And to give you a bit more color, I can talk about one of our investees, which is Envie Autonomie. Envie Autonomie is a social business, a French one, which picks up used medical equipment, such as wheelchairs. They then recondition them thanks to people in job integration programs, so people that are underprivileged. And finally, they sell them at a solidarity price to people who can't afford them but who need them. So here you have a triple impact. This is what we like in this investee. First, an environmental impact thanks to the reconditioning. And then 2 social impacts, employment of people that are excluded from the job market, and also the price which is affordable to people. So we love impact, but what we do is not philanthropy, we do investment. The impact has to be at the core of the strategy of the company, but we still assess the financial health of the company so that we can avoid default and loss. We invest in equity, quasi-equity and debt in these companies, and we have specialized tools for NGOs and cooperatives, because these kind of companies have a strong impact as well. And once we have invested, we are an active investor as we support the company all along the investment phase, which can be quite long because we are long-term investors. And then a few details on the fund itself. So the fund was created in 2014, so we now have a strong track record. It is a French Article 9 FPS with several French labels such as ESUS, Finansol, or France Relance, for those who know. And we are able to give liquidity thanks to a monthly valuation and a 15 to 20% cash pocket. So you've understood, now we have 23 investees, but there are still a lot of companies that are helping excluded people that are in need for capital to scale and grow. So for 2022, our aim is to invest 30 million euros in these companies, and I'll be happy to discuss any opportunity with you after if needed. Thank you.
Thank you, Marie. Great. Any questions? Yeah, Hans.
Thank you for the presentation. Looking at the investee companies, it looks like a very French initiative. How do you envisage making this type of fund interesting for non-French investors?
It's a good question. Now it's true we invest in France-based company and they can have activity abroad. We have validated the possibility now to invest abroad in Europe, so we are still thinking of our strategy internationally, European mainly. We have our first, we are studying our first prospect in Germany. So we're gonna attract investors through our investment first, and secondly, we are doing a lot of lobbying around what we do because our funds are fueled by 90-10 funds, which are specific French funds, and we are aiming to develop these funds abroad so that they can fuel our fund that will have also a European impact. Thank you.
Thank you. Super. Okay. So next we have the impact mover who rely on the donut economics theory to build their investment thesis. That's Ring Capital. Welcome.
Hello everybody, my name is Nicolas Sellier. I'm co-founder of Ring Capital, as you said it right. And I will present you today Ring Altitude the second, which is an impact growth tech fund. Okay, but you know that the digitalization of the world is massive. It has been accelerating lately with the pandemics. Meanwhile, we face two huge challenges, both environmental and social. The good news, if any, is that this has led to a clear emergence of a new generation of entrepreneurs who've innovated to use tech and digital to find new solutions to the world problems. And more importantly, maybe less visibly, entrepreneurs that have also innovated to create new business models. Business models will be able to align business performance and the solution and impact and solution to social and environmental problems. This kind of the new generation of entrepreneurs, you know what, you're here and you know that, they look for a new generation, a new kind of investors. Investors that are mission-driven investors who share the same interests and the same quest for alignment between performance and impact. But when they are tech entrepreneurs, they also need investors that understand the tech issues and can help them expand, grow their business, and develop nicely. So this is Ring. We are at the full intersection between the impact investing world, where we have been a pioneer in France, and between the tech scene, the tech investing world, where we have been active since the early 2000s. The team. Since the very beginning of Ring in 2018, we set up a team with mixed operating and investing experience. So we have in the team some investors profile like me, tech investors, some impact investors, some specialists of data science, of R&D, of digital marketing, and some entrepreneurs. My co-founder, Geoffrey, has been a very successful internet entrepreneur, a full entrepreneur. Myself, I've been a tech investor for the last 20 years. I've spent most of my time at Kapitaal, which is a French VC fund. And on the side project, I co-founded Investir Plus in 2010, which was the first tech impact early stage VC fund in France. But this team is supported with 4 operating partners, which are dedicated to help companies grow on sales and marketing, on impact, on HR, and in the United States. Okay, we invest, we are not sector driven, we invest in entrepreneurs whose tech and innovation tackle the world urgent and real challenge. Today, the sector in where we see the most opportunities are energy transition, circular economy, education, health, and employment. invest in some companies like can be like each one is a platform, a company training, recruiting refugees for large corporates, or more recently in Castelli, which are fighting against plastic bottles, or Ava in the US, an intelligence artificial company helping dumb people to follow conversation with 17%. Okay, since 2008, we've implemented this strategy through 3 vehicles: one philanthropic foundation vehicle, one early stage venture capital fund dedicated to impact Series A impact company, which is a 50 million fund, and one growth tech fund, Ring Altitude, of 165 million euros. Ring Altitude transitioned in 2020 from a sustainable investor to a full impact investor, and now we are, which have proven that both growth tech companies could be very impactful and performing well. Ring Altitude 2 is a successor to Ring Altitude 1, and will invest in growing tech companies reaching above 10 million euro revenues, profitable, and whose key business is to address social and environmental challenge. Thank you very much, and see you soon.
Thank you. Great. Super sharp 4 minutes also. Any questions?
Hi, thank you for this. Just asking for you, you see a lot of P guys going where you are right now, very generalized funds. You see that as an advantage or a risk for you? How do you perceive that as being, pioneer in there?
It's a risk, it's competition, but at least it forces us to be more focused. P guys, here we see them. When we are competing with P guys, as you said, we have data scientists, we have a guy who was one of the head of R&D at Creas. We are really techies, tech guys. So entrepreneurs, they like to see a kind of variety of expertise within the investor. We have Marie Capucine, who was the VP Marketing Europe of Saxo Bank, very knowledgeable about digital marketing and fintech. So this is an asset. And second, it's the same thing is true for impact. When entrepreneurs raise money, many of them like to paint some green color or social color. Yeah, we need money. By the way, you're an impact fund, we are an impact VC fund. We are pretty tough on the impact standard, on putting the mission in the bylaws, in KPIs reporting, in asking people to incentive all their employees with stock options that are dedicated to KPIs. So the real mission-driven entrepreneur is say, yeah, these guys are going to make us different, help us grow and be more impactful and therefore stronger. Those who are not that serious about that, with yeah, we are impact, but we don't want to do that much. Sharing the capital with all employees is not necessarily very useful, and we don't want to be bothered with legal and mission and so on. So it helps us make the being more attractive to real mission-driven entrepreneur, and to have the other less interested in what we offer. Thank you.
Thank you. Great question too. Okay. Next up, we have a Nordic team with an amazing track record in building and scaling tech companies, and now building a European impact investment platform. Welcome, Norselab. Thank you.
Hello, everyone. Bonjour. I'm super excited to be here today. I actually lived here 14 years, and I moved back to Norway 4 years ago, back home, you could probably say, to join Norselab, and this is the first time I'm back. So I'm hoping that I can convey some of the excitement that I have when I present Norselab here at the world's largest event for the planet. We're all gathered here because we know that we need to change the course of our future. We need bold ambitions, we need serious commitments, and Norselab is here to be part of the change. We are a Nordic impact investment platform based out of Oslo, Norway, and we invest in our planet. We have one big ambition, and that is to prove that impact is the future across all asset classes. What we do is that we back meaningful companies to spark radical change in resource-intensive global industries. And to do so, we have created our very own impact philosophy. We call it meaningfulness, and let me explain what that is. It's built on 3 core pillars. So this approach consists First, of considering impact through a company's products and services. Of course, for bigger companies, operations can be important. We believe that when we want to support the companies of tomorrow, we need to focus on their products. How do they make money, basically, and is that good for people and the planet? The second thing that we care very much about is what we call net impact. And that is about accounting both for the negative and the positive that companies have to bring. And we quantify this and we produce a net impact score for all of our investments. And of course, we can only invest if companies are solidly on the positive side. And the third pillar of our approach is that we want to invest where it's most urgent. And it's from here that our industry focus comes. We know that in large global industries such as agriculture, energy, real estate, you name them, there are huge challenges, and this is where we can drive massive positive impact. So our watchword in our approach is integrity. And that is why we apply multiple lenses when we assess a company, and we apply multiple data layers. And no investment can happen at Norselab unless my team and I have approved it. So before even getting in front of the IC, we will have to check it off as yes, this is a meaningful company, you're good to go, you can invest if you believe that from the commercial side, it's all good. So I'm going to take a minute to talk about our latest Fund for Change, Meaningful Equity 2. This is an invitation to join the Nordic Impact Revolution. Here we will invest in net positive companies with potent growth potential. We will invest in late seed to Series A, and with a clear ambition to take the company to a larger international round within 12 to 18 months. We invest primarily in powerful impact themes such as energy transition and efficiency, circularity, and sustainable food systems, which is, of course, everything from the sea, the land, and all the way to the consumer's plate. And yes, I see you. So with that, let me say thank you. We're looking for investors now for Meaningful Equity 2, those that want to help us create a meaningful future for all. So join the Nordic Impact Wave, and let's change now.
Thank you very much. Love the call to action. Join the Nordic Revolution. One question.
There are fantastic frameworks such as the AMP framework to measure your positive or negative impact on society. What type of framework did you use to come up with your net impact?
Yeah, so we use several frameworks. As I said, we really care about having integrity in our approach. So for us, the only way to get integrity is to really look at multiple lenses, multiple layers of data. So of course, our approach based on frameworks such as the Impact Management Project. We of course use the SDGs. We of course look to the EU regulations. And we also work with a Finnish data provider called the Upright Project that you might know, that help us with the quantification of net impact.
Okay, awesome. Thank you so much.
Thank you so much.
Thank you. So we have 3 more funds in this final stretch. Next one, newly launched fund that has the ambition to drastically redesign how we use goods and materials. This is Circular Innovation Fund. Welcome.
Thank you very much. Hi everyone, I'm really happy to be here today to have the opportunity to present Circular Innovation Fund. So let me start with a very common statement. We have one planet only, and it's limited. And so I'm a dad of 2, and I don't want to tell them to stop the growth. I don't want to tell them to go to Mars. I think there are other options, like building a resource efficiency future. So that's the ground of the Circular Innovation Fund initiatives. So it is obviously an impact fund. So we are SFDR 9, and our investment thesis focus on coping with natural resources scarcity and the issues related to waste pollution. So we are a global fund. This is, I believe, the first global initiative on the circular economy. We will invest in North America and in Europe and in Asia. And to do so, we are partnering between, this is a joint initiative supported by two pioneers in the clean tech VC scene, Demeter Partner based in Europe and Cycle Capital based in North America. So I'm the partner in Europe. There is another partner in North America, and we are currently hiring a third partner to go to Asia. We believe that this global footprint is key for this initiative. In frontier markets, resource management is not nice to have, is really key to fuel the growth of these highly demanding areas. This is a fund that is supported by strong industrials with a great diversity. So we have L'Oreal as anchor investor. So they are here today, and really thank them because they have been here and co-designing. Thank you, Rachel. Co-designing this circular innovation fund with us. This is a great support. We appreciate their valuable input in assessing the opportunities. We also have investors from other areas like Axens, which is one of the leader in the plastic recycling, and many other support. Last key point I would like to underline is the gender diversity. So this is really something that is central to our investment thesis, and our carried interest is related to this performance. Regarding portfolio construction, so we just started. We made our first closing a few months ago. We had 2 investments done already, and we are focusing on growth stages startups on 7 sectors. I will be happy to give you more details on this investment strategy. We are focusing on companies that are generating revenues or that have strong interests from clients. We are not excluding capital-intensive companies because we believe that seed funds have made an amazing job in the last 10 years, and that we have the opportunity to pick up the best ones going on the industrial scale. Time is running out, so we have a comprehensive ESG platform throughout the whole investment and divestment process. We have this joint structure with Cycle Capital and Demeter. We have industrial LPs helping us doing the best investment possible. And that's where we are. We made the first closing at 80 million. We are currently rolling closing. We are about 100 million and targeting by the end of the year, with your support, hopefully, 150 million.
Great. Thank you so much. Question, I think.
Hi. So I'm just wondering, are you seeking the same type of impact in North America, Europe, and Asia? Or are the difference you see in those markets?
There are obviously differences. I think Europe is more mature market in that capacity. But we do see very interesting, I mean, it's a huge market, so we do see opportunities that are really attractive for us. I can give you plenty of examples, but I mean, the entrepreneurs are not as trained to discuss with impact funds, but they are definitely entrepreneurs with strong beliefs, and those are the ones we want to support. So although it is maybe not such a mature market, we do find opportunities and great entrepreneurs. And so, yeah, there are differences. We can elaborate on that, but there are definitely opportunities, and that's why we want to have this global footprint.
Okay, brilliant. Thank you so much, Circular Innovation Fund. So we have 2 more funds left. Next one, an early stage investor in the infrastructure that supports all women and working families to close the gender gap. This is Springbank Collective. Welcome.
Hello. Oh, yes. Good afternoon. You stole my thunder. I'm Jen Koss. I'm the founding partner of Springbank Collective. And as mentioned, we're an early stage investor in the infrastructure that supports all women and working families to close the gender gap. I think you guys know the stats. There's a lot of them. They're very dire. Women are really out of the workforce. And unfortunately, I mean, I think the stat that's really shocking is even in the US as of January, they were at an all-time 33-year low. And why? Because of so much unmet demand, antiquated norms, and truly sort of crystallized biases. And private capital has dramatically underinvested and underestimated, to be honest, the infrastructure that serves all women and working families. And we think of this as a $1 trillion opportunity hidden in plain sight. To be honest, I think post-COVID, we have all seen the invisible become visible, so maybe it's not so hidden any longer. And that's why we started Springbank Collective, because we wanted to invest in this infrastructure that will improve the lived experience of women. The infrastructure is made up of 3 key categories, and this is how we look at it thematically. It's care, career, and consumer. Care, so connected, better solutions for children, the aging, and even more specifically, women's health. So an example would be our company called Wealthy, which is a care concierge service providing admin and logistics for those taking care of loved ones that are aging or sick. Career, reforming and reimagining work as flexible and fair. An example of that would be Chief. It's a members network for networking and support for executive women. And as of last month, it became a unicorn in our portfolio. And consumer, so building healthier, sustainable families and household. As a mother of 4, this one means very much to me. An example of that, by the way, is includes financial sort of caregiving or financial health. So Copper is a teen banking app that provides financial literacy first in schools, and 52% of those users actually are girls. We are a unique team. It's 3 GPs. It's myself and 2 others who are based in New York. Awkwardly, we have 6 Harvard degrees between us, but we have other wider networks that bring in from corporate finance, private equity, fund investing, angel investing, policy, strategic consulting, operating, being an entrepreneur. This is our edge. This is how we win deals. This is how we source them, diligence them, and invest and provide a lot of value for our founders. We also have an amazing group of advisors who invest in and around our thesis, also operate in our thesis or invest in our sub-theses. And they have been critical for us as well in terms of sourcing and diligencing and providing value for our founders. And then we have great partners such as Pivotal, which is Melinda Gates's arm, her venture arm. And she supports all of our ecosystem building work in what we call FamTech. So how do we get here? We started 3 years ago, formally investing together. We started writing angel checks, and then we handpicked a network of over 100 individuals and investors to help deploy capital with us deal by deal. Then we realized we're onto something, so let's raise a fund. Our pre-fund, which is the investments that we made prior to raising this fund, has a gross TVPI of 1.9 times. We have 12 markups. We have 1 exit. We have 1 unicorn. So we seem to have a pretty good track record so far. And our current fund includes 7 investments alongside some stellar co-investors who we call friends and great partners with all genuine respect. Finally, I'm getting there. Just quickly, this is how we win. It's 3 things. It's our mission. We win deals and get on cap tables because founders like us and they like our mission and they want to be mission aligned. our network, because we are highly connected, and also have, as I mentioned, the collective, our advisors, people who support us and who help us source and diligence and provide value. And then the last is that we have real-world experience. I think this is something that is sometimes underlooked and maybe even underestimated, but the fact that we come from typically non-venture background is important. Finally, oh, sorry, no?
Yeah, sorry.
Yeah,
sorry.
okay.
That was awesome. Okay, thank you so much. Beautiful, clear presentation. Jen, any questions for Jen?
Yes.
How do you engage with your investees from an impact perspective?
Our investors. So impact for us is really, I like to say like we're impact without actually saying impact. That's one. But second is, it's sort of first screen, last check. So that's kind of how we look at it. And we really drive it sort of company by company and within each of the companies and founders. A lot of these are very early stage companies. So we basically, for example, Wealthy is a good one. What do they track? An important metric for them is what percentage of caregivers who use their service do not fall out of caregiving or their jobs. That's one example. We have a pelvic floor therapy omni-channel sort of retailer. What do they measure? They measure sort of postpartum health improvement, self-reported. So we kind of look at each of the companies and work with them to come up with their metrics. Yes.
Awesome. Thank you
very
so
much.
Thank you. Okay, so we are now coming to a close. And as with the first round, I want you to give the same energy and enthusiasm to the last fund that you gave to the first. So in a minute, let's welcome on stage dedicated to climate tech, Planet A Ventures. Welcome.
Thanks a lot. Yeah, I think the name is pretty implying, and I'm super happy to be here today and talk to you about us as Planet A and why we think that capital has a huge responsibility and why today's investment decisions are going to shape tomorrow's economy. Quick heads up with Planet A. We are currently raising our first fund. We've hit our target fund size, are now filling up to the hard cap, which is fantastic. I have had 2 first closings and 8 investments that I'm also going to mention quickly, but what I really want to get at today is our thesis on impact. So basically, we looked at what we know from science, and we found that the planetary boundaries, a model developed by the Swedish scientist Rockström, are extremely important because we have to understand that our planet is interconnected, the biosphere is interconnected, and by singling out one single dimension, we might run into the next existential crisis with a foreseeing eye. And therefore, we've clustered 4 impact categories, which are, of course, greenhouse gas mitigation, but also waste reduction, resource savings, and biodiversity protection. And the beauty about all of these 4 categories is that you can put units to that. You can measure that in kilograms, in tons, in liters, in square miles, and so on. And in the end, it comes down to that simple formula, which is impact is the product of 2 variables, the business side multiplied with the impact side. So the question stands, how do you measure impact? And we've been touching on the topic quite a bit. And in the end, we decided to make that a core of what we do at Planet A. And basically, we fall back to one of the gold standards when it comes to impact measurement. We're using life cycle assessments. A life cycle assessment, in a nutshell, is a holistic overview of all materialistic and energetic inputs which are needed to create a certain product. So from sourcing the raw material to transporting it, to producing the product, to the use phase itself. So does it give away microplastics, for example, while being used, and to the end of life. So how can it be recycled in the dedicated region? And in the end, this is a big tree with all of these little data points, which sum up to a holistic picture. We're able to make a very precise, not only qualitative, but quantitative statement about how much better a certain product is compared to the status quo. And we decided that this is so essential, and this is also helping us in our investment process, that this is something we do in-house. So we have a team of scientists which conduct these life cycle assessments. It's a lengthy process, don't get me wrong, so we only do it once we enter DD, but based on the thesis that in tomorrow's economy, the companies which are creating the biggest positive impact will also be the biggest winners in a traditional sense, meaning commercially. And maybe to put some lab-grown meat to the bone here, how that looks like, this is the spectrum of companies that we invest into. So from software to dedicated hardware plays. And maybe to single out 2 of them, one company I want to talk about is MakerSite. MakerSite is basically a a SaaS tool which allows users, so this can be designers, purchasers, product owners, and so on, to in real time understand the scope 3 emissions of their products. So they've really cracked that nut throughout the entire supply chain. So they know basically only based on your bill of material and where you produce the entire emission, cost, and compliance footprint of your product, which is absolutely insane. And they are also allowing users to simulate how would that change if you exchange the casing from titanium to aluminum, for example. And the other side of the spectrum, the hardware case, a company that I want to single out is Ineratech. Ineratech is basically the e-kerosene, the world leader for the production of e-kerosene. So a way to tackle how can we fly long distance, and I'm sure a couple of you came here today by plane, how can we tackle that and make it and produce it in a sustainable manner. So I talked about Planet A in a nutshell. We invest between 1 to 2 million initially in seed to Series A tickets. And one thing I think I forgot to mention is that we, based on our knowledge, we were one of the first, maybe the first SFDR Article 9 classified fund in Germany. Don't want to take more away of your lunch break, so over to you.
Thank you so much, Nick. Wonderful. Okay, so last question you have the privilege of asking.
Thanks a lot. Very interesting, and I really appreciated the detail on your methodological approach for measuring impact. So in that sense, I'm curious to know if you actually try to measure separately the impact that your investments have versus your impact as an investor. That's one question. And second, since you do like such a complex process of measuring impact through the LCA and all of those details, do you make a case of doing an exit strategy that also considers this to have a continuity on the impact that you're having or that the company is having?
Two very good questions. I would say that the impact that we as a company have is rather easy to calculate. It's basically only travel and not too much. We are a remote-only team, so no office, no nothing. So that's easily distinguished, and we of course track that. And then on the life cycle assessments themselves, yes, you must do it dynamically because sourcing changes for the products, they of course grow, and also you put it into a reference system, right? You have a company that you compare with something. This is how you end up with a delta, and the delta changes, but also the object of desire, so the company that we invested in changes over time. So we do yearly snapshots on the LCA and adapt it to whatever we find. Yeah.
Okay, thank you, Nick. Sorry to keep cutting you there. So that brings us to a close of all the funds that have pitched. Let's have a show of hands. Who saw someone on stage that you maybe want to deepen connections with? Grab again after. Okay, that's, I would say, a good 80-90% of the room. Let's have a show of hands who's hungry or thirsty. That's, I think, 100% of the room. So good news for you. If you registered for this session and have a purple wristband, there's a special lunch and cocktail in the meeting Eiffel, which is just around the corner in the middle by the bubble, and volunteers will help you find it. Thank you, everyone, for being a super focused and energetic audience. Thanks to all the pitchers, and thanks to the LPs. That was great. Wonderful. Thank you.